Welcome back to the Money and Wealth Show. I'm Sterling Fox in conversation with John Mauldin, the president of Millennium Wave Investments in Dallas, Texas, also the editor of Thoughts from the Front Line. And John, how do people tune into your Thoughts from the Front Line?
Well, it's a free letter, and they can go to just johnmauldin.com and click on Thoughts from the Front Line and give me, an email address, and then they're one of my 1.5 million closest friends.
And how frequently do you?
Goes out every Friday night, Saturday
okay.
morning, depending on when I finish.
In a recent presentation at the Agora Financial Symposium in Vancouver, you made a presentation for hundreds of very interested guests, talking about a route, a path that you had chosen that the United States, you suggest, should follow by way of getting through this really choppy economic time. Describe it for us, please.
Dropping back a little bit, I've got 7 kids. Only one teenager left, thank God. And so I'm somewhat of an expert on bad choices. I've watched them make, teenagers want to make the easy choice. You got to work to teach them to make the hard choice.
Sure.
Well, in the United States especially, we made a lot of easy choices in the 90s and the 2000s. We had a budget surplus and we squandered that. We borrowed, we just did a lot of dumb things. We ran up debts, we loaned money to people that couldn't pay it back. Now, we're like the teenager faced with the hard choice. We have the difference between bad choice and worse choices. There's no easy choice. There's
nothing left.
There's no good choices left.
Right.
And so I think the optimum choice for us, because you cannot continue to grow your debt above nominal GDP forever. At some point, the bond market jerks your chain. You become Greece. That's where they came.
Okay.
So to keep from doing that, it's what I call the glide path option. Just like a plane coming in, you come in slowly. You don't do it. You don't want to do it all at once.
Sure.
And we need to knock and pull a number out of the air: $150 billion a year off of our deficit every year for the next 5-6 years, and get us down to where we have a credible deficit that's less than nominal GDP. Because you can grow your deficit, you can run deficits less than nominal GDP till the cows come home. Doesn't kill the goose. But the way we're going at it right now, we could kill the goose. And I think that's the message of the votes when in Massachusetts and other things. The people are scared.
Yeah.
They're just plain scared. I mean, it's not that they're mad about Obamacare. They're just scared. They're worried that these people are going to run us off the cliff.
And it comes across as angry to a lot of us looking across the fence watching your news every night.
Some of these people are angry,
right?
And
but it's fear motivated. Right?
I think it's fear, and because they're concerned that the world we grew up in is going away, and to some degree it is, and because that glide path option, and we don't have enough time to go into it.
But set achievable targets and knock that debt down year after year.
But that's going to end up creating a slow growth, rather high unemployment, uncomfortable taxes. I mean, it's not going to be a pleasant regime. We all the easy choices we made, now we've got to make the hard choices, because if we don't make the hard choice, then we're going to be faced with the disastrous choice of what to do when the bond market says, no, you can't have any more money.
No.
And you're in a deflationary recession and interest rates are going up. That would be really ugly.
Talk about tough choices that investors are going to have to make, John, as the government tries to unravel this mess. Where do investors go to be safe and maybe even make a buck?
I think that safe is the first word.
I think so.
You've got to make sure, I mean, it's absolute return vehicles, bonds, income producing real estate if you really know it and you're not too over leveraged and you've got the ability to do the carry in case somebody moves out. Things where people are paying you for the use of your money rather than you speculating that something's going to go up or down. After the next recession, I think that the rest of the world markets will move down in sympathy with the U.S. just like they normally do. But I think we could see the emerging markets, the developing markets, decouple from the developed world. I mean, the developed world, it's a past tense term. Developing is current tense.
Right.
And I think that the trade of the decade, after the next recession, a year or 2 years from now, whenever it happens, it could happen in 2011 because of the tax increases could tank the U.S. economy. Then the trade of the decade may be emerging markets.
Interesting stuff. John, we're fresh out of time. I regret only the fact that we only have a half hour.
Well,
it's been a real pleasure having you on the program, sir. Thank you so much for joining us.
Appreciate it.
And we'll be right back.
Good afternoon. My name is Larry Ray. I'm the chairman and CEO of Mauldin Gold Corp. As the name states, we do have a deposit we're developing in British Columbia, which is a pure molybdenum deposit. But our focus these days is on magnesium in Nevada. Through serendipity, we discovered a large deposit of magnesium running about 10% with a high purity and consists of about 256 million tonnes at this time, 52 billion pounds. Our main emphasis is to move this project forward by beginning a drill program later this year in which we can increase the integrity of the resources into the indicated and inferred, as well as increase the resource itself. For further information, please visit our website at mollycorp.com or phone us at 604-531-9639.
Tax Tips with David Ingram.
When's a spouse a spouse? Back when I started in this business, you had to be married to have a spouse. And then they came along with Canada Pension Plan and said you're a spouse if you've been living together for 3 years and you already have another spouse. And then in 1987, the tax office came along and said, hey, you can have a spouse if you've just been living together for a year and you're living together on December 31st. So a spouse is a spouse if you're living together, whether you're the same sex or opposite sex, and it affects your tax return. It affects GST. But more importantly, if you're living with somebody and you are showing yourself as single on that tax return to pick up an extra GST credit or something, stop it right now. Because if that person dies and you've been putting down that you're not living with them, you're not entitled to their GST, widows or widower's pension. And that can be super, super, super value. So if you are sitting there in a situation where you're living with a person, same sex, opposite sex, in a marital relationship, make sure that you show yourself as married, living common law on the tax return. That's a tax tip from David Ingram.
Tax Tips with David Ingram.
CPP, it's interesting. When you hit my age and you suddenly start getting the check, you think about all those years that you didn't pay the maximum into CPP. Realtors, mutual fund salespeople, a whole bunch of stockbrokers and so on have their affairs arranged so that they're self-employed and they take their expenses way, 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 way down so they don't pay much tax. As a consequence, they don't pay CPP. What they should be doing is working for their employer, getting a T4 slip and getting a T2200, which gives them the right to take off just about all the same expenses. Then they get to pay maximum CPP, they still pay a little bit of tax, and they get a bigger pension when you retire. That's a tax tip. That's an investment tip. That's a pension tip from David Ingram.
And that's our program for this week. Our thanks to David Ingram and to our special guest, John Mauldin. And thank you for joining us. If you have some thoughts about today's show that you'd like to share with us, please send them along to comments@themoneyandwealthshow.com. I'm Sterling Fox. See you next time.